You're welcome to my channel. We are still continuing with our topic, tax administration. And in this video, we shall start by looking at payment of tax. Payment of tax, first we shall look at final tax. And under final tax, tax charged in any assessment is payable. An assessment is an evaluation of the taxpayer's property by the tax authority to determine the value of that property. So after an assessment, the tax that is charged in an assessment is payable. The taxpayer is supposed to pay it. In the case of a taxpayer required to furnish a return, on the due date for furnishing the return to which the assessment relates, or in any other case, the taxpayer is supposed to furnish the return or to give the tax authority details about the assessment within 45 days from the date of service of the notice of assessment. Where a taxpayer has lodged a notice of objection to an assessment when they do not want to be assessed, the amount of tax payable by the taxpayer pending final resolution of the objection is 30% of the tax assessed or part of the tax not in the dispute, whichever is greater. The commissioner may waive the amount or accept a lesser amount than that is required to be paid in case where the objection has been reasonably made to an assessment. In case the taxpayer objects an assessment, he's supposed to pay 30% of the tax that he was supposed to pay. But he or she can pay lesser amount of the tax in case the commissioner is satisfied with the reason for the objection. Upon written application by the taxpayer, the commissioner may, where good cause is shown, allow for the payment of tax in installments of equal or varying amounts as the commissioner may determine, having regard to the circumstances. So when a taxpayer applies, a commissioner can allow the taxpayer to pay the tax in installments. But where the tax is permitted to be paid by installments and there is default in payment of any installment, the whole balance of the tax outstanding shall become immediately payable. In case the commissioner allows the taxpayer to pay in installments and then you fail to pay some installment, you are required to pay the whole amount at the same time. So that is the final tax. Tax charged in an assessment is payable. Then we look at the provisional tax. Provisional tax, a person who derives or expects to derive any income during a year of income which is not or will not be subject to withholding tax at source is liable to pay provisional tax. So any income that is derived and it's not charged withholding tax, it will be charged provisional tax. Any person who derives or expects to derive any income during the year of income which will not be subject to withholding tax is liable to pay provisional tax. And provisional tax can be for a company or an individual. Provisional tax for a company. A provisional taxpayer other than an individual is liable to pay 2 installments of provisional tax on or before the last day of the 6th month and the 12th month of the year. So for a company is supposed to pay provisional tax 2 times, before or on the last day of the 6th month, that is June, and then December, 12th month of the year. The amount of each installment of provisional tax is calculated according to the formula. Since there are 2 installments, you divide 100 by 2, so we get 50%. 50% times A minus B, whereby A is the estimated tax payable by the provisional taxpayer for the year of income, and B is the amount of any tax withheld prior to the date for payment of the installment. B is the amount of tax withheld or withholding tax. 50% times A into brackets minus B. Then provisional tax for an individual. Provisional tax for an individual. A provisional taxpayer who is an individual is liable to pay 4 installments of provisional tax on or before the last day of the 3rd month, 6th month, 9th month, and then the 12th month. So they're supposed to pay tax in March, June, September, and then December. Yeah, that is an individual provisional taxpayer, and the amount of each installment of provisional tax for a year is calculated according to the formula. Since it's 4 installments, it's 100 divided by 4, you get 25. So 25% times A minus B, whereby A is the estimated tax payable by the provisional taxpayer for the year of income, and B is the amount of any tax withheld prior to the due date for payment of the installment. Yeah, then we go to payment of tax withheld. A withholding agent shall pay to the commissioner of any tax that has been withheld or should have been withheld within 15 days after the end of the month in which the payment subject to withholding tax was made by the withholding agent. So payment of tax withheld is supposed to be paid within 15 days. Yeah. In respect of remuneration or receipts to non-resident entertainers or sportsmen, the amount withheld shall be paid within 5 days of the day of performance or by the day before the non-resident leaves Uganda, whichever is earlier. So in case of the non-residents, amount withheld is supposed to be paid within 5 days. But for residents, it's supposed to be paid within 15 days. Yeah. Thanks for watching. Don't forget to subscribe, like, comment, share with your friends, and watch my next video. We shall be continuing with our topic, tax administration.